Okay, everybody, we got about an hour to the close. It doesn't look like things are going to change too much, so I thought I'd try to get this out to you as early as possible. So we're in a little pullback with the S&P. And the thing is, though, I say this a lot because it's true a lot, that you can't judge the entire market by the S&P. It is something that people like to track. I kind of keep an eye on it, but when it really gets right down to it, I look at it most when I'm going to do a video. During the day, I just kind of look at what's working during the day, week, month, and year. I look at what's working and I kind of let the major averages take care of themselves. But it does give us a sense of what's kind of going on in the broader market. There's that old and inaccurate saying of a rising tide lifts all boats is really not true, because a lot of boats sink irrespective of the way the tide goes. But let's just say a rising tide does kind of affect most stocks in the market and they'll move higher. On the other hand, screw the tide now. When there's heavy pressure that you can see in the S&P or in the broader market, you will see that in individual stocks as well. And it all comes down to the fact that institutions and institutional activity is the greatest mover of stocks. And so we want to always track what the institutions are doing. And that's one of the reasons why I have been talking so much about Microsoft, Apple. I mean, these are institutional favorites who have been riding them all the way up. And if the stocks are down like they are now, it's not like, well, then institutions aren't going to buy them if they're down like this. No, it's because institutions are not buying them. It's like, what's your order? What's the sequence here? Institutions are not buying these stocks. Institutions are tending to sell these stocks. If that's the case, then what's the chart going to look like? Chart's going to look like it is right now. Now, if you say, on the contrary, and this is a minor point, but people, you got to understand this, or you're always going to struggle with charts and you're going to think they're voodoo, which is something that I haven't talked to some of these people in a decade and a half, but some guys that I used to know who were really, really bright guys always used to say charts are voodoo and like they're bullshit, and I can show you one real chart and a bunch of charts that are just made by a computer at random, and you won't be able to tell the difference. And my response always was, yeah, you're right. I couldn't tell the difference. But if you want to have them continue to move randomly from one thing or another, then I can find which one to trade. The point is, charts move according to the activity of the market. You have to understand that. Now, when the chart moves to a certain point, then it absolutely does impact things. Like the stock really starts taking a crap, more and more people are going to hit the outhouse and start doing it too. So it's just really important, at least the way I look at it, to look at these major stocks that have been getting such play and pay attention to them. Meta is good. This is kind of bucking the trend a little bit, but notice this too. Meta doesn't sell anything. Like, it doesn't sell any tangible goods like Apple. And you can say, well, yeah, they do cloud and all that. I get it. But everybody, when you think of Apple, you think of the iPhone. Let's face it. And same thing with Microsoft. Microsoft sells stuff, software. Stuff like that. So they sell things. But Meta, they're just pure data scavengers. That's all they do. Zuckerberg, probably one of the bigger, shall we just say, sketchy guys with respect to character that I've ever seen, who's not in jail. That's all they do is skim information. So the information skimming business is still pretty good. So I got that. NVIDIA is just has just fallen. I've already pointed this out to you. Big rebound today, really a bullish engulfing pattern where the stock actually gapped down below Friday's intraday low and is now well above Friday's intraday high. And it's looking to me like it'll close at or near the high of the day. I mean, as I look at this now, you can probably buy it now and look for 440 on this. So I like the way this is trading today, but this pullback here was kind of a shot across the bow, and it was reflective of what's going on in the other stocks. I'm going to go ahead and take this down a little bit. So there. Anyway, so we still want to watch this as resistance. And by the way, I've been saying it looks like Nvidia could go down, this and that and the other thing. This could just be kind of a reflexive rebound, but I'm not wedded to that one way or another, and neither should you be. You don't ever want to be trading without doubt, without questioning yourself every day being open to the fact that you may be wrong. That's a Paul Tudor Jones thing, that he always assumes every day that he's wrong on every trade. And so then he'll go through, and if he sees that he is wrong, then he's going to fix that. But he reconfirms the correctness of his trade. I'm looking at this, and I don't have a position in this stock. I closed out a short position today. Earlier today. I closed out some on Friday as well. Made a little bit of money on Friday, lost a little bit of money today. I got a little distracted. And so all in all, it's been a wash. But the bottom line is this: Netflix is still really in this range right here. And so I'll just get back to it. What I'm talking about here is tech has kind of been drifting lower, and I wouldn't look at this. If you look at all the times that this is tagged or surpassed the 20-day moving average, now it's fallen lower. The 20-day has rolled over. The 50-day will probably roll over within a week or two if this stays where it is. But you cannot tell me with any credibility that this is not any different than this or this, or this. It's very different. And so the market tenor has changed in these mega cap stocks because the S&P, the Qs, the NASDAQ 100 is cap weighted. And so these stocks that are so heavily capitalized, they got more money than God, they're going to weigh this if these stocks are pulling lower, and they really are now. And then breadth is also on the decline. We'll go ahead and show it in the usual. Okay. It's also declining. So this is a market that's looking for its footing. I'll just put it that way. Now, I'll spend a few minutes on this. So Jim Cramer contacted me on Friday. I thought it was going to be just the typical chart of the day, and it turns out to be a weekend endeavor that carried over into this morning. But I will, for the most part anyway, do anything for Jim. If it wasn't for him, I'd be doing something else other than trading. So if he asks me for something, I'll do it if at all possible. So I had given him, he asked me, somebody that he knew who's a chartist supposedly had told him last year, hey, Disney looks, last April, Disney looks great, this and that. So I think it's going to pop on earnings. And so he asked me to do that coverage. And you can look at it on Mad Money back then. And so I looked at it and I said, yeah, this thing, it looks good. Looks like it could pop over earnings. And it wasn't, I think, well, you could see where the company reported earnings right here. But I did it the Friday before. And maybe it was, I think it was this Friday. Yeah, I mean, I covered the stock on this Friday right here and said, yeah, you know, you can probably buy this over earnings, but if it falls below here, I think it was 96.46 or something. If it falls below here, that's your drop dead. That's your stop. You got to get out because you're wrong. It's an earnings trade. You got to be careful. And so, boom, company reports earnings. It sucks. Bob Iger sucked. He's more confused than, I don't know, somebody who's really confused. Up and down and in and out. No, we love Hulu. We hate Hulu. We lost 4 million subscribers to ESPU Plus, but we're going to go ahead and raise rates, and we think it's going to be okay. You know, all this crap. And so the only guidance was, hey, man, trust us. We're all good. And that wasn't really working for smart people. And so, but still, hey, man, it's the House of Mouse. You know, it's Disney. Who gives a crap? Nobody did, because this has kept going down, and then it stabilized, and then it reported earnings, boom, right there. And so now the stock is up. Now, from where this stock was bought, let's say you bought it right here at the close, at one point, you're down 14, 15%. Now, for me, that's a cardinal sin. But for an investor like Jim, or these longer term investors that place so much stock in fundamentals, in fact, a lot of times over the chart, down 15% barely gets your attention. But I think and he said he bought a big slug of it for his charitable trust based on what I said. And this is a great example. And Jim wasn't blaming me at all. Not at all. He doesn't do that. He's never done that. In fact, he'll give me credit for really, really good calls like I had on Big Lots ages ago and Lennar and stuff like that. But he doesn't say you suck on something like this. But the thing is, so he bought a bunch of stock, and I didn't know about it until he just mentioned it to me on Friday. I'm going, oh, crap. And so he wanted me to kind of do a redux on this. So I told you here, the deal is it blew through the stop. If it doesn't recover, then why did I put my stop there in the first place? It was because this should hold. So if it gaps down and it doesn't recover, then sell the stock. Don't commit the number one sin that new traders do, which is, oh, the stock fell below my stop, where I was going to sell it. I'll just hold it until it comes back. Okay, everybody's done it one time or another. So I can't really say that's stupid, because I'll be offending everyone, including myself. Let's just say it's, as we used to use in appellate law when I was suing the government for various things, totally fun. It's poorly reasoned. And so that didn't work. Now, though, the stock is up. It's still down overall. But it's now down a manageable 12%. But the thing that you want to look at here, and I'm not really sure that I covered this much. I think I did a little bit. This was the last move on earnings, but it's still in a basing pattern. So if you're buying here, I think I might have even said this in the write-up, if you're buying here because you think the stock's going to run up like this, you're engaged in magical thinking. First of all, look, let's face it, Disney sucks. It costs your life savings to take your kids into the theme park. Their programming is, I'll just say, is not being particularly well received. There's some other things with that, and streaming. There's only so much people are willing to pay for streaming, and there are only so many streaming services that they're willing to pay. And ESPN was supposed to be a big deal for them. I don't believe that it is, and so do a lot of other people. It's like I mentioned in my morning note, it's like all they have is this Stephen A. Smith guy, and there's one person in the world who thinks this guy's a genius, and his name's Stephen A. Smith. So they've got issues here. I don't see this stock moving up anytime soon. My sense is that as long as, though, the stock holds above this level, about above 85, well, this sounds silly to say. As long as the stock holds above 85, then we know it's not going lower. Okay, try putting that in your pipe and smoking it. But this is not a stock that you want to own, because my bet is you'll be able to get it at this same price 1 quarter from now, maybe even further out than now. And they're paying a massive dividend of, the alcohol content in my Heineken Double Lot beer. They don't pay a dividend anymore. So the bottom line is this. This stock didn't pop on earnings. You ditch it right away. You would have been out for, for 3 months. You'd have been out for 3 months and avoided a lot of pain. So he'll be covering that to some extent. Now, Google, he also asked me to look at that, which I did. He really likes it. I looked at it, and I'm looking at it in this vein. I wouldn't buy it here. I'm watching it because it could work, but this just doesn't quite look like a great setup to me. It has been a real stalwart when it comes to comparing to the S&P 500. You know, it continues to move up here, but see, what I'm trying to explain to you is the difference between what you give somebody on TV and what I give you in our content here. And it's not like I'm giving you the best stuff, or I'm giving Cramer the best stuff or the worst stuff. That's not it at all. It's that every trader, there are different styles of trading. And if you're on CNBC or Fox and you've got your own show that's going to be later streamed, where people are going to be viewing it the next day or whenever it is, you can't be giving them this micro stuff like I try to give you. It'd make horrible TV. It's just horrible TV, because you're going to constantly be saying like, well, you should have been there yesterday. So my stuff that I give Jim is more general. But a lot of times, and this doesn't have anything to do with me, a lot of times people forget about that. And they just sit here and hold on. Case in point here, Monday, I talked to talked to Charles about it on Fox way back here, somewhere in here, about how it had to break out, and it didn't break out. So this is a stock that you're not in. I think I actually bought some on an up day, but then I sold it right away. I didn't like it. But then over the last couple days, this has been trading really well. Now, it's still it's still below support. It's still below resistance. But if the stock ultimately runs up to here, you're not going to hear me crowing and saying, see, I was right, I'm invincible. No, because that wasn't the trade. The trade was like back here somewhere. Like this is what I was looking for. So I'm giving you a couple examples of my work and how I have to kind of do things a little bit differently than you do. But it's really important that you understand this is the case with everybody. Everybody has their own style of trading. So find yours and stick with it. Okay? Now, another one, this is one that I had also, Jim had wanted me to do this. I said, MasterCard's looking pretty good. Visa is also looking okay. Not perfect. If you've been around for a while, this is kind of like chop and slop to me. This is a little bit better. And he said, well, give me Google and MasterCard. And so I said, I can't do that much. I have a job. But this is also one that you should be watching, that I'm watching. So let's move on. Okay. Align. Nasty pullback here after a gap and crap over the last couple days. It's held. I'm I looked at options. I was thinking about like selling some 340 puts or something, but they're way too thin. The spreads, the bid-ask spread is just silly. It's just way too much. And just there's really no volume there. But this is something that active traders could have picked up. And I saw a couple of you doing, I don't know if it was this, but it was on another stock that looked just like that, kind of doing the dumpster dive thing. Roku is another stock that is, it's working after a big pullback. And so I put on a call trade on that where we're buying the October $80 calls and we're selling the August 18th, meaning this Friday, the August 18th, $85 calls. And so we're up on the trade, but we are down on the $85 calls. And so if the stock closes, up here, we'll get there. If the stock closes up here on right around there on Friday, then we have to make a move. I have to make a move, and I'll probably buy it back. I think we're going to be good. I don't see it rallying that much. But if it does, we're still in the sweet spot. We're making money on the trade. But this is one of those, a little bit like a line where it's a really big zigzag. And those are really tough to trade. And they're not trend trades, really. They're short-term trades. Here. That's not up to date. There. Like 30-minute chart. These are short-term trades like this, like that. On the daily chart, it's just a big steep drop and then a little bounce. So those are the kinds of things that I'm looking at now. Penn National is another one, like a gap and then a big pullback and then a rebound off of this level. And this is another one where I suggested a trade here where we're buying the stock and we're selling the put and we're selling the call to capture the premium here. And so if the stock rallies and holds above 25 into next Friday, not this coming Friday, we'll make about 9% on the trade. Like no fuss, no muss, about 9% on a little less than 2-week trade. So those are the kinds of things that I'm looking at right now. DraftKings could be kind of a little touch and go. Let me kind of get rid of this. I was doing a couple other things. But this is one I would watch it, but I wouldn't trade it. If you hold it, you're good. It's 50-day moving average-ish, but I wouldn't trade it. Now, Cardinal Health reports earnings tomorrow. I wouldn't buy it, but I'd sure watch it because this is sure looking like a pretty good touch and go here. NVIDIA, I've already mentioned this. It's got kind of a recovery, a recovery attempt going, kind of a reversal recovery. But I don't feel, unless you're day trading it or something, I don't feel like it's something to be touched before earnings. Now, some of the homies, Nail, triple ETF is looking solid, which would mean that the Dow Jones Home Builders is looking good. So we'll look at some of these stocks, like Pulte, just continues to move higher. This is a stock that you want to hold. The home building stocks continue to do well, and it was weird because they were doing well all during the rate hikes, not completely, but during most of the Fed's stupid rate hikes after their stupid transitory inflation call, with 400 economists working for them to make sure that they cover all the bases so that they have an absolute bulletproof way to be wrong every time. So after all of that, these home builders have still continued to move higher. And now when it is, as I guess it always has for quite a while, looking like the Fed is close to being done, The home builders are still moving up, and now it's like there's a reason for them to be moving up. Oh, looks like rates are going to come down. They just still keep going. I wouldn't be piling into these, but especially this one, KB is looking really good. Lennar, it's kind of a little touch and go. It's looking like a little pullback to the 50. Definitely needs to hold. If it doesn't hold 120, then this is a stock you don't want to be long. I mean, it's literally a stop that I would keep that tight. Risk like 3.5%. It's just, you got to play these things close to the vest. This a little bit steeper pullback. This is a little bit tougher, but you could do the same thing and say if it falls below 120, I'm out. Now, away from homies, Intuit is another one that I'm looking at, thinking, maybe if this pops out on volume, but they report in 10 days. It's just something that I'm looking at. And by the way, a lot of times, with stocks, I keep lists from a lot of different scans. Trading is really a lot of the process of elimination. You're eliminating, 95% of the market. And then from what you have left, you continue to go through and eliminate things that don't quite work. And so this is something that I want to follow, but it's not anything that I can get real, psyched about now. Now, Celsius, big pop, continues to move. If you're buying this now, you're totally chasing. But with that said, this is a pretty strong move. And if you are an active trader, see, I look at this and I think it's just about done. Volume is about average now, but after the kind of volume this has had, this is looking like maybe we've got a peak here. And my bet is that if you buy this stock, you'll buy it right at the top. I mean, that's just the way it goes. But this is printing higher lows, higher high today. So if you're a super active trader, you can at least look at this tomorrow. Now, Patterson, this looks like it's popping out of a squeeze, a little bit dicey, but you can see what's going on here. So I think this stock could go higher, and this would be one I would protect with a pretty tight stop. All the stocks that I see that are working, I really want to be protecting the positions, keep losses small. Ferrari, this probably of all the charts that I'm looking at today, this is probably the best one, not because of what it's doing right now, but because of what it's setting up to do. It really looks like it's, it's setting up to run higher, and then, at some point start the next leg. So this is a good low risk entry point because, like, this is the low right here is 307.19, and so if you're buying the stock, you're buying it here, and you're keeping your stop below 307. Because the only reason you're buying right now is because you think the 50-day is going to hold. So that's your thesis. I'm buying now because the 50-day is going to hold and I want to be in this stock. Oh, well, when are you going to know that you should sell? Well, Horseshack, it would be because the 50-day moving average has not held and this low is not the low. So that's when I know how to trade this stock. It's different if you're looking at the stock now and saying, I want to buy this stock now. Okay, well, when are you going to know to get out? Well, I think when it's, if it falls back to the 50-day moving average, then that'll mean this uptrend is in trouble. Okay, so let me get this straight. You're buying it up at what tends to be near the highs on this uptrending zigzag. So you're buying it close to here. And you're saying if the stock falls below the 50-day moving average, then I'll sell. So you're going to ride this puppy down over 8% before you even start wondering if you're wrong. And how much is it going to go up if you're right from here? Well, probably not too far. And so sure enough, what happens? Now if you're looking to buy the stock closer to the 50, wouldn't this have been a better time to do it? If you're saying when the 50-day moving average breaks, I want to be out. So now your risk using the same indicator, which is the 50-day moving average, is now down less than 2%. And also you're able to buy it much lower than you were when you were looking at this as just, oh, I want to buy the stock. This is a textbook example of why patience will make you money. It won't get you in every trade, but it'll get you in the right trades at the right time. And so here we are now, and you have my analysis on the stock. And then the last one, I think I've already covered this in a different context, but Meta really is looking like it's kind of a touch and go. So this would be one that if I'm saying, all right, I want to buy this stock right now, my stop's right there, 4%. Some would say, well, give it till here, give it 8% or whatever. My stop is just below the 50-day moving average. And this is why. Because if it falls below the 50, well, that's different, isn't it? And see, I want to trade the same. I'm buying the same. I don't want to be in different because that's been unexpected. So anyway, that's all I got for you. Hope you all are doing well. I will see you mañana.